Why haven't you started investing in your long-term wealth? So many people wait for the perfect time and then they often just forget, and then it's too late. The market has been pulling back pretty drastically in the last few months, with some names pulling back as much as 70%. The time is now. You need to start researching what stocks and companies you want to own in the long term. When Amazon pulled back 20% back in 2014, people our age group probably did not buy the dip. 6 years later, the stock returned over 1,100% in 2020. Today, Amazon is down over 30%. I'm not saying buy Amazon, but I'm saying the time is now to start doing research on stocks you want to own for your long-term wealth. You have to start doing these things now. Without further ado, let's dive in. When looking to invest in the long term on a position or a stock that you want to own, you got to first ask yourself, what company do you want to invest in? You could take recommendations from your friends, you could take recommendations from people on the internet, but the thing with that is you need to understand, are they actually trying to just sell you a good company? Is there value in there, or are they trying to sell you junk? A lot of the times, the best place to start is within your own home. Look around you, see what products and services you're using, and start researching those brands and those companies. That may be the best starting point for you to start doing some research on those companies to see if you find value in them, and maybe you can start adding them to your long-term portfolios or your long-term holdings. Now, the next thing you want to do is you want to get to know the company. You got to research the web about them. What do they do? Read the company's profile on investing websites. You really have to understand, you don't want to invest in something that you don't understand. All right, if you cannot answer the basic questions about the company, chances are the company is not something that you should invest in. Research the company, understand what they do, check their About Us page, and really go through everything until you are well aware of what's going on in that company and what it is that they do. Some of the basic questions that you may ask yourself is, when was the company established? Do you know that? What does the company do to make profits? What industry are they in? Are they cash flow positive? These are things you want to ask yourself, and if you can't answer these basic questions, then it's probably not the right stock to invest in. Next, we're going to talk about market cap. Market cap determines the company's worth. A high market cap company is often a safer investment. Low market cap companies tend to be a little bit riskier. They also can reap higher returns. Identifying market cap is good, and it's also a good way for you to identify or diversify your portfolio and have various different things in your basket. Another thing we need to look at is EPS. EPS stands for earnings per share, often used as an indicator of a company's profitability. It is determined by taking the company's profit, dividing it by the number of outstanding shares, and that gives you your EPS. A higher EPS equals a higher value. When you're looking at EPS, it's actually best to use EPS and compare it with other companies in the same industry to see how they're performing along next to each other. The next thing we want to look at is PE. PE stands for price to earnings ratio. The PE compares the stock's current price to its EPS. So EPS we just talked about, PE is that comparison. It is often used by investors to establish if a company is overvalued or undervalued. Companies that are losing money will most likely not have any PE, because obviously that number doesn't exist as there's no EPS. Next, and most importantly here, you want to go look at the company's debt. Nobody likes debt. The same goes with companies that you want to invest in. Make sure the companies that you are investing in have more assets than they do liabilities. You want to ensure that they have little or no debt at all. The next thing you want to look at is ROE, return on equity. This is as simple as it sounds. We want to find companies with a higher ROE. Every time we invest on their equities, we want to have a higher return on it. Anything above an 8 to 10 is sufficient. Less than that could mean the company does not have much growth potential. So look for a ROE of anywhere from 8 to 10. That tells us that it's something that we're interested in and has good growth potential. We got to start digging into some financials, and this is just the basics, not the nitty-gritty stuff, but the basics will tell you how the company is doing and how you guys should approach the investment going forward. Take a look at the company's last 2-year statement. Research it, stare at it, keep looking at it. You want to look for the following things: income statement, balance sheet, for cash flow. Get to know these things, understand how they are, and really research these when it comes to the company that you're investing in the long term. But wait, there's more. We want to take a look at dilution. Dilution is essentially raising capital. When a company tries to raise money by diluting their shares, they're actually just bringing more shares to the market. An example of this is a common stock price is really low and a number of shares is really high. This is a major red flag. You need to be aware of this and need to stay away from companies that do this. Companies that are obviously always raising capital 24/7 is not a good thing. However, when you have a good company and they're raising capital and putting the money towards good use, that's a positive. You also want to look into the future. You always want to be aware of the macro and microeconomic factors. What is going on in the market? What is going on in the world? Will what's happening right now have an impact on your company? Is this a company that will be around in the future? Is it a dying breed like Blockbuster was? Will there be future demand for this? Or is this a hype that's going to be all fizzled out in the next few months? You also want to take a look at competition at all times. How many people are doing this? How well is it performing against other companies in the same industry? Are their competitors better? And if they are, why aren't you investing in those competitors? Always ask yourself, what are the competitors doing? How well are they doing? And maybe that's the better investment that you can take. Another thing that we can talk about is insiders and management. This is important because we need to understand insider ownership. When a company has high insider ownership, it's usually a plus. What does this tell us? This tells us that the insiders are putting their money where their mouth is. The insiders are obviously believing in their own company and they're willing to put that risk and say, you know what, this company is worth my money, and that's what we're looking at when it comes to high insider ownership. Now, another thing you want to look at is management. Are they buying or selling? How much are they buying or selling? And at what rate? Are they constantly selling, try to get out of a position? Or are they constantly buying very aggressively? Now, with that said, what has happened for them to start buying or selling? What's triggered this insane move? These are the little basic things that you guys need to take a look at. You guys need to research. And when you do, you will get a better understanding of whether or not this company is something that you want to invest in. How do we gather all this information in one spot and use one software in order to do that? Well, I'm going to dive into my screen here and I'll show you guys just how you can do that. So we're back at the PC here, and one tool that I found that really helps me with my research and my investing plans, even for my day trading, is actually MarketSmith. All right, so the good thing about them is that they really have all the information right here in one screen for you, and you don't have to go to multiple places to get all this information. They kind of gather all the info, bring it to you right here on one screen, and we can checklist everything off our list very quickly and very efficiently. All right, so with that said, let's jump into how we do the research and what methods I use to kind of start finding companies that I want to invest in the long term. We've logged into MarketSmith here, and let's say we have found this company, SRE, that we're looking to invest in on the long term. What I like to do is I actually like to build a Google Doc with a certain thing. This information right here, you guys can replicate this if you want, and I simply just take this, copy it, go down, do a line break or whatever the case may be here, right? And then do it again. I copy and paste this for as many stocks as I want to research, and I start filling it in. All right, so for example here, the company name is Sempra Energy, SRE. What they do, I figure I go to their website here, I check their about me, I understand what it is that they do, and it looks like this is a natural gas company. What industry is it in? I fill this in, and if you go back to what I explained earlier before we jumped into the screen here, there was a few things that I talked about. Market cap, EPS, PE, ROE, all this stuff we've talked about, and this website right here, MarketSmith, actually explains all of that. To dive right in, all right, we want to know what the market cap for this is. So we can see right here, we have our market cap. Our market cap is 54.61 million. So I'm going to come here and put 54.61, billion. I'm going to put that there. I want to know what the shares float is. So the shares float is right here. That's the shares float. So I'm going to put here 311.2 million. Now I want to know what the EPS is. So when we're looking at the EPS, we're going to come down to this left side here, and on this side is going to give us all our information that we need to look at in regards to ownership, earnings, and so forth. I don't want to look at the yearly EPS, although I could, but I want to look at the most recent EPS. So the most recent EPS here, it looks like it was in June 2022. All right, so right here, this is our EPS, this is our earnings for that quarter. We can see the EPS here is telling us that it is 1.98. I'm going to go back to my list here. I'm going to put 1.98 and I'm going to make sure I know this is for June. And I can come back up here and see for 2021, it was 8.43. So these are things that I can kind of make note of as well. Then we're going to look at PE. When we're looking at PE, what are we looking at here? So PE is right here. The PE ratio is given to us right there. And we're going to put our PE down here as 20. When we are going through PE, we understand that PE is the price to earnings ratio. Okay, so we understand what that is. And this is 20. That's the one that we're looking at right there. Next, we're going to look at ROE. All right, ROE is return on equity. So again, we're going to find that information right here. And return on equity is 11. All right, if you guys remember what we talked about, anything over 8 to 10 is good. So I'm going to put here and put 11 right there. Then we're looking at debt. So we're looking at debt here. We have the information given to us right here, 81%. A little bit concerning there. So we just make note of this and we go on. Now we need to know when the last dilution was. So we got to get into financial statements and go through all the income statements and understand when was the last dilution that took place. When was the last offering that the company had? And how many dilutions were done in the last year? This information can take you a little bit of time to figure out. If you don't know how to look for this information, let me know. I'll be able to help you out with that. But this in itself can be a little bit of a longer video. So if you look in the income statements, the financial statements, and the nitty-gritty stuff, you'll be able to explain all that and you'll be able to identify all that actually. We also want to know what the short interest is. So the short interest can be found right here. There you go. So that's our short interest. We write it down. This one says 19%. All right, then we're going to look at short interest. Although not really important, you can find it right here on the top left side, or you can actually check FinViz. That also tells you your short interest as well. All right, most importantly now, we want to go look at ownership and what percentage of ownership is owned by management and funds, and we want to kind of take a look at that. You can see that information right here. I'm going to erase that stuff right there. You can see it very briefly right here under ownership. You can see that funds own about 54% of it, so you can fill this information in right here. So 54% is owned by funds, right? So fund is owned 54% and management owns about 1%. All right, so when you get into the bigger flow, bigger market cap names, it's harder for management to own a bigger portion of the stock. All right, so that's something to know. When you're dealing with lower flow, lower market cap names, for example, bio names, then management can actually own a lot more of the actual stock. So when you're dealing with a $54 billion market cap company, it's hard for management to own more than 3 to 4 to 5%. So in this case, it's only 1%. Funds in this regards own 54% of it. And we're going to get to more details of what all that means. If you come here to the right side, you can press related information. And then what's going to happen is all this stuff is going to populate here. You have owners and funds. It gives you the same information. Funds own 54%, banks own 4%, and percentage held by management, again, 1% here. But now one thing I want you guys to focus on here is this section right here. It tells us fund ownership per month, or every, I think, quarter, I guess. You can see September, December, March, June, September, December, March, June. Something to take a note of here, you can see that it's slowly increasing. These numbers are getting bigger and bigger, right? So the funds over the last 2 years have slowly started buying more and more of this. So is fund ownership increasing or decreasing? To answer that question, it is increasing. Right? We have fund ownership that is increasing. We've gone ahead and answered some of the questions here. We have all this information. We've done some research on the last dilution and how many dilutions is done in the last year. Now we're going to compile a list of all this together. All right. Once we do have that list, we can generate or get a good idea of what it is that company is doing. Do we like the company? Do we want to invest in it? Do we want to hold on to it? Now, another neat thing that MarketSmith actually has, so for those of you that do have it or those of you that do want to get it, you can go here and go to the checklist section. So if you go to the checklist section right here, the William J. O'Neill is actually a really good thing. All right, so there's a few checklists that you can go through. All right, so there's the Warren Buffett checklist, which tells you it's what it's looking for. It looks for a certain few things that is on his checklist, and once it actually passes those checklists, the chances of them owning that stock is slightly higher. So here you have 75% of the checklist complete. So this might be something that would possibly interest Warren Buffett. Now there's the William J. O'Neill one, which this one is 89%, checks off 8 out of the 9 things. So another neat thing to kind of have in your artillery to kind of look for that. This is pretty much how I do all my research, guys. You got to start with market cap, float, EPS, PE. You got to understand all this stuff. You got to understand debt, and you really want to look at dilution. The reason why dilution and market cap is important is because a lot of the times new investors and new traders get stuck in a position where they're buying very low float companies or low shares companies or low market cap companies that are just oftentimes bio stocks that are just burning cash, burning money, have to dilute every time the stock pops, and that's something that you guys want to avoid. And how do you avoid that? By doing this type of research and not just buying something because somebody told you is a good company. Just because Joe with 200 million followers says this is a good company to buy doesn't necessarily mean that's something that you need to do. You need to go through your checklist, do this type of research, understand what it is that you're owning, understand the market cap, do management own it, are funds increasing, what's the EPS, have they done a good job in the last few quarters, have they done a good job in the last few years, and is this pullback really just because of the economy, or have they really drastically been suffering in their operation of their business? I hope you guys did find this video valuable, exciting, and hopefully it does a great job helping you guys identify some long-term stocks that you want to invest in. Position yourself nicely now, so in about 10 to 15 years you have a good portfolio. All right, guys, if you guys did enjoy this content, I would really appreciate it if you guys smash that like button. I would also appreciate it if you guys can comment down below. Let me know what you thought of the video and if you guys want more content like this. Again, thank you all for watching, and I'll catch you on the next one.